Have you ever wondered why making your first $100,000 feels nearly impossible, but things suddenly start to click? It's one of the most frustrating parts of building wealth. You grind, you save, you invest, and yet, the progress seems painfully slow. But here's the crazy part. Something magical happens once you hit that first $100,000, the next $100,000, and the next comes so much easier. Why is that? Well, in this video, we will break it down for you. I'm going to explain why the first $100,000 is the hardest part of your wealth journey, and why once you cross that threshold, the path to financial freedom gets way smoother. By the end of this video, you'll not only understand why this happens, but you'll also walk away with actionable steps to get there faster. Ready to start stacking up those dollars? Let's dive in. Let's be honest. Making that first $100,000 can feel impossible. It's like pushing a boulder uphill. But why is it so hard? And why does it feel like everything is working against you in those early stages? Let's break it down. First off, when you're starting from zero, you're quite literally building from scratch. Most people don't have a huge inheritance or trust fund waiting for them. Instead, you're trying to save from your paycheck after taxes, bills, and everything else. Low savings and poor financial habits make it even harder to get off the ground. Maybe you're trying to save $100 here and there, but that feels like drops in the bucket, right? And honestly, a lot of us aren't taught how to manage money properly. We might be great at making it, but not so much at keeping it. Then, there's the issue of compounding. Now, compounding is magic, but only once you've got enough capital for it to actually work. When you're starting with a small principal, like $1,000 or even $5,000, the growth just isn't as impressive. You see that tiny 2% or 5% gain, and it barely feels like progress. But here's the thing. When your principal is small, it takes time for those returns to really make an impact. That's why the early stages feel so slow. It's like planting seeds and waiting for them to sprout. And let's talk about behavioral challenges. Impatience is a killer. We all want instant results, but wealth building is more like a marathon than a sprint. Plus, there's the temptation to spend rather than save. Those new shoes, that new phone, it all adds up, eating away at your ability to save and invest. That's why financial discipline is key here. Without it, you'll find yourself stuck in a cycle of earning and spending, never really making progress toward that first $100,000. But here's the silver lining, the power of small wins. Saving even a little bit and seeing your account grow, whether it's $500 or $1,000, boost your confidence. It's these small wins that help you build the habit of saving and investing consistently. Remember, every little step counts. As your savings grow, so does your discipline, and that momentum helps push you closer to your goal. It's not just about reaching $100,000, it's about who you become along the way. So yeah, the first $100,000 is tough. You're battling small savings, minimal compounding, bad habits, and even your own impatience. But those small wins, they're everything. Stick with it, and you'll start seeing real progress. So, you've finally hit your first $100,000. First of all, congrats! That's a massive milestone. But guess what? The next $100,000 comes much easier. And no, it's not just because you're smarter now. Well, maybe it is. Let's break it down. The real magic here is compounding. This is where your money starts working for you in ways that feel almost effortless. Let me give you an example. If you have $100,000 invested and it earns a 10% return in a year, that's an extra $10,000. Now, if you've already hit $200,000, that same 10% return will give you $20,000. You're literally making double the money with the same return, just because you have more capital in the game. See how powerful that is? You're getting paid for just sticking with it. Over time, compounding turns into exponential growth. In the early stages, it feels like you're watching paint dry. But after a while, things pick up speed, and your money starts growing faster than you can believe. Not only that, but your financial knowledge and experience really start to kick in. After reaching your first 100K, you've learned so much about saving, investing, and managing your money. The mistakes you make in the beginning, you won't be making them again. You're now making smarter, faster decisions. This is where momentum and habits come into play. You've built the right habits and learned financial discipline. That means you're less likely to splurge or make risky choices. You have the confidence to keep pushing forward, and that makes the next $100,000 seem way more achievable. At this point, you're like a snowball rolling downhill, just getting bigger and faster as you go. And here's the real game changer: higher return opportunities. With more capital at your disposal, you can invest in things that weren't even an option at the start, like real estate, private businesses, or even higher growth stocks. When you have more money, you're able to take advantage of better deals and higher returns. It's almost like the universe is rewarding you for sticking it out and building your wealth. So, while the first 100K feels like an uphill battle, remember that the next ones come easier. Compounding works its magic, your financial wisdom grows, and with solid habits in place, the momentum will carry you forward to bigger and better opportunities. Trust me, once you've got the ball rolling, you're unstoppable. Now, when we talk about building wealth, we can't ignore one of the greatest minds in investing, the late Charlie Munger, Warren Buffett's longtime business partner and vice chairman of Berkshire Hathaway. Munger was known for his no-nonsense approach to life and investing, and he's given us some timeless insights that are particularly relevant when it comes to reaching that first $100,000. Munger once famously said, "The first $100,000 is a big, but you gotta do it." Let that sink in. He was not sugarcoating it. He said it like it was. Getting to your first $100,000 is tough, frustrating, and feels like an uphill battle. But once you do it, the game changes. You know, the struggle to hit that first $100,000 isn't just something everyday people deal with. Even some of the most successful investors in history had to grind through this stage. Let me tell you about one of the greatest investors of all time, Warren Buffett. Now, when Warren Buffett was first starting, he didn't have a billion-dollar portfolio, and the road to his first $100,000 was slow. He's mentioned before that the first $100,000 is by far the hardest. Why? Because you're trying to build momentum with very little capital to work with. Buffett even took on various small jobs to generate extra cash to invest, from delivering newspapers to selling chewing gum door-to-door as a kid. It wasn't glamorous, but it worked. It wasn't until he hit that magic number, $100,000, that things really started to take off for him. By then, compounding began doing its magic, and suddenly, every decision he made carried a lot more weight. With that first milestone out of the way, the next $100,000 came quicker, and it just kept accelerating from there. Alright, so, now that we've talked about why the first $100,000 is tough and why it gets easier, let's dive into some practical steps you can take to reach that milestone faster. These are actionable, straightforward tips you can start using today to build momentum toward your first 100K. Let's jump right in. First up, start early and be consistent. The earlier you start, the more time you give your money to grow through compounding. Even if you're only able to save a small amount each month, starting early can have a huge impact. Imagine saving just $200 a month at an 8% annual return. Over time, that small amount will snowball. If you can keep that up, you'll be amazed at how quickly your wealth grows. And the key here is consistency. Consistency is more important than how much you start with. So, get in the habit of regularly setting aside a portion of your income, whether it's weekly, bi-weekly, or monthly, and stick with it. Next, automate your savings. One of the easiest ways to ensure you stay consistent is to automate everything. Set up automatic transfers so that a portion of your paycheck goes directly into your savings or investment account before you even have a chance to spend it. This removes the temptation to spend and makes saving a no-brainer. It's a simple psychological trick, but it's incredibly effective. You don't have to think about it, and over time, you'll see your balance grow without having to do much work. The less friction you create for yourself, the easier it will be to reach that first 100K. Now let's talk about earning more. While saving is crucial, increasing your income is a game changer. Think of ways you can boost your earnings, whether it's through a side hustle, freelancing, or even asking for a raise at your current job. One effective strategy is to find a side hustle that doesn't require a massive time commitment, but can add some extra income each month. Platforms like Fiverr, Upwork, or even driving for Uber or delivering with DoorDash can give you that boost. And remember, career advancement is just as important. Investing in yourself by learning new skills, getting certifications, or even networking more can lead to promotions and salary increases, which will accelerate your savings rate. One of the most important steps? Avoid bad debt. Debt can be a huge roadblock on your path to 100K. High-interest credit card debt and payday loans can eat away at your income and make it feel like you're running in place. So, avoid unnecessary debt at all costs. If you do have debt, make a plan to pay it down as quickly as possible, focusing on the highest interest debt first. The less debt you have, the more of your income can go towards saving and investing. Finally, invest wisely. You can't save your way to wealth alone. Once you've built up some savings, it's time to invest. A simple and effective way to start is with index funds. These funds track the overall stock market and offer diversification at a low cost, making them a great option for beginner investors. If you're looking for something more hands-on, you can also explore individual stocks, real estate, or even starting a business. But for most people, sticking with index funds and dollar cost averaging over time will put you in a strong position. The key is to stay invested for the long term. Don't try to time the market, just keep contributing, even during the downturns, because that's when you'll get the best returns. So, to recap, start early, automate your savings, look for ways to earn more, avoid debt, and invest wisely. These are simple yet powerful strategies to help you reach that first $100,000. And trust me, once you get there, things really do start to snowball. Stay consistent, keep your eyes on the long-term goal, and you'll be well on your way. If you found this helpful, don't forget to like this video and subscribe for more tips on building wealth and financial freedom. Let me know in the comments, what step are you focusing on to hit your first 100K? I'd love to hear from you.